Hey traders, welcome back to the channel. So in today's video, I want to show you how do you catch pullbacks and retracement with this moving average trading strategy. Okay, there are many people who know the moving average, right? The indicator, they know how to, how it works. But what they don't know is that they don't know how to actually put it together and use it as a trading strategy. Okay, so in today's video, I would like to show you how to do just that. Okay, I'll give you a full breakdown of this strategy, right? I will tell you the entry criteria, I'll give you the stop loss, and I'll tell you how to take profit as well. Okay, so what am I going to cover in this video? Okay, as I mentioned, the first thing that I want to do is I want to cover the criteria of the moving average trading strategy that allows you to capture the retracement and pullbacks. Okay, basically what happens is that you're looking for a trend, right, and you're trying to catch a pullback to enter into the existing trend. Okay, I'll go through the entry trigger, meaning how do you enter the trade, where do you put your stop loss, how do you take profit, and all those good stuff. Okay, so it's a full walkthrough. Okay, I don't leave you hanging. I give you the entry, stop loss, and the take profit. Right. After that I want to show you examples. I want to go to the charts. I'll switch to trading view and take you through step by step how I do it. Right, so that hopefully you can apply it. Right after watching this video, you can go straight to your charts and start back testing it. Okay, now if you stay to the end, okay, I have a special sauce, okay, quote unquote sauce, that can drastically increase your win rate with this strategy. Okay, so if you are trading some form of moving average trading strategy, right, it doesn't have to be ours, right, you want to stay tuned to the end, because this secret sauce will help you increase your win rate. Okay, and if you go to other YouTube channels, you will not see this. Okay, this is not a rehash of other people's materials. This is our own experience. Okay, so you want to stay to the end, because that that will help you increase your win rate. Okay, and who doesn't want a higher win rate? Okay, so by the way, if you are enjoying this video so far, right, give us a thumbs up, right, help us to grow this channel, right, make sure you hit the subscribe button and also turn on the notification bell. Okay, we create videos like this almost every day to serve you, right? We are here on a mission to help you become a profitable trader. Okay, so please just help us to grow, right? It doesn't take you more than 5 seconds of your time, so we would definitely appreciate it. Okay, we also have a 3-day trading guide for you, so make sure you check that out. The link is in the description. Okay, that's another trading strategy that works. Okay, we have a lot of videos about it, and it works, period. Right, so if you're a bit confused, you need a guide, right? If this information in this video is a bit too complicated for you, then please get our 3-day trading guide, because we cover everything that you need to know in that 3-day trading guide. Okay, so let's go into the criteria of the moving average trading strategy that I would like to teach you today. Okay, so there's only two criteria, two very simple criteria. Okay, the first criteria that it must follow the long-term trend. Okay, so how do we define long-term trend? Okay, so let me see if I can draw it. Okay, so earlier on I said that this strategy is you are trying to catch the, trying to catch the retracements here. Okay, so step number one, or rather criteria number one, is that you must have the moving average sloping up. Okay, so this is a 200 period exponential moving average. Okay, just a brief introduction. If you do not know what a moving average is, what it does is it just takes the previous 200 candles, right? A 200 period moving average means that it takes the previous 200 candles closing price and forms a kind of like a smoothened line, so that it's much clearer. Okay, of course, if you use a 50 period, then it's going to take into account the previous 50 candles, right? The close of the previous 50 candles. Okay, so that's how a moving average works. Okay, so criteria number one is that you want to follow the long-term trend. Okay, in our definition is that price is above the 20 EMA. Okay, if you want to buy, okay, price must be above the 200 EMA. If you want to sell, then price must be below the 200 EMA. Okay, so if you see that price is above 200 EMA, you do not want to be selling. Okay, you do not want to be selling. This is very important. Okay, you do not want to be selling. Okay, even if the 50 period moving average is down, meaning that maybe the 50 period moving average is higher, okay, but its price is still above the 200 moving average, you will still want to buy. Okay, you do not want to be looking for selling opportunities. Okay, this is very important. You always want to follow the long-term trend. Okay, so ask yourself first, what is long-term trend? Okay, that's very easy. Just plot the moving average and you should have your directions. Do you want to buy or do you want to sell? Okay. Now, criteria number 2 is that we are going to use another exponential moving average, which is the 50-period exponential moving average, okay? You want to see price bounce off, okay? So you have the 200 moving average, okay? And then you have the 50-period moving average, okay? So you want to see price come to the 50-period moving average and bounce off, okay? So this is a bullish example, okay? So I will go into the charts later to show you how to apply this, okay? So not to worry. Okay, let me just clear this and then I'll proceed. Okay, so how do you enter? Okay, before I go into the actual case examples, I want to talk about the entry trigger first, stop loss, and how do you take profit. Okay, so your entry trigger is very simple. Okay, as I mentioned, you want to look for a reaction of the 50 exponential moving average. Okay, so your entry is very simple. I want you to look for a candlestick pattern. Okay, there is the engulfing pattern and the pin bar pattern. Okay, you can just use these two patterns. Okay, again, I have all this covered in the 3-day trading guide. So if you have not downloaded it, make sure you download it. Okay, so basically this is the bullish engulfing pattern. So basically this candle over here engulfs this candle. Okay, the close of this candle is higher than the open of this candle. Okay, for bearish engulfing pattern, the close of this candle is lower than the open of the previous candle. Okay, a pin bar on the other hand is just kind of like a very long wick candle. Okay, but in the end it closed, it closed back lower to show that there is strong rejection of the level. Okay, again, I do not want to go into too much details because all this is provided in a 3-day trading guide. Okay, so I'm going to assume that you kind of already understand how to read candlestick patterns. Okay, so your entry will be very simple. The moment you see any of these candlestick patterns, you can enter the trade. Okay. So how do you do your stop loss? Okay, how do you set your stop loss? Okay, you can set your stop loss as 1 ATR above below your entry. Okay, what is 1 ATR? Okay, in this case, you are looking at the 14 days daily ATR. That means you go onto the daily chart. Okay, you go onto the daily chart and you find out what is the ATR. Okay, so if let's say the ATR is 40 pips, then you're going to set a stop loss of 40 pips from your entry. Okay, again, I'm going to the chart. So if you are a bit confused, just wait for me to finish this portion. Okay, I'll just finish the take profit and then we'll go straight into the charts. Okay, so take profit, you have two options. Okay, option number 1 is more of, if you are just trying to catch a swing, just trying to catch a swing in the market, what you can do is you can exit at the previous swing high or swing low. Okay, that's option number 1. Option number 2 is if you want to ride the trend, then you can throw your stop loss. Okay, you can throw your stop loss below the moving average, the 50-period moving average, or you can throw your stop loss according to market structure. Okay, again, I will go into the charts to explain each of this. Okay, so not to worry. Okay, so let's go into the charts right now and let me show you how do you apply this strategy. Okay. Okay, so right here, what we have is the euro dollar. Okay, we're on the daily chart. Okay, so the first thing is that we need two of the exponential moving average. We have the 50 period and we have the 200 period. Okay, in this case, this blue line here is actually the 50 period and the orange line is the 200 period exponential moving average. Okay, so criteria number 1 involves looking at the 200 period moving average. Okay, so very simple. Anything above, if price is above, then you want to be buying. Okay, if price is below, okay, you want to be selling. Okay, so as of right now, the market is trading above the 200 EMA, exponential moving average. So that means that you want to be buying. Okay, so how do you buy? Okay, in this case, you want to wait for price to retrace. You want to wait for price to retrace to the 50 period moving average. You want to look for candlestick pattern and then you want to enter the trade. Okay, of course this hasn't happened yet, so let's go back into history so that I can show you some examples of this strategy. Okay, okay, we have it here. Okay, let's say that we are somewhere over here right now. Okay, let's say that it's here. Okay, let's look at this area, this zone. Okay, so criteria number 1 is that the price must be trading below the 200 EMA. Okay, so yes, it is. Okay, criteria number 2 is that you must see a form of rejection at the 50 EMA, 50 period EMA. Okay, so we have that as well. Okay, so over here we have a, if you zoom in, right, you can see that we actually have a very nice pin bar over here. Okay, so what we do is that we have the the ATR as well, right, for our entry, and for our entry we use the candlestick pattern. For our stop loss we use the ATR. Okay, so right here I have the 14 day ATR, and we're in the day chart. Okay, so just a gentle reminder, you always want to be using the daily ATR. Okay, do not use this on the H4, because ATR has to be used on the daily, because you want to know the daily range. Okay, knowing the H4 range, it doesn't really make sense, right? Because when you set your stop loss, you always want to take into account the entire trading range, the entire day's trading range, not just 4 hours. Okay, so please use the ATR on the daily chart. Okay, so if you do not know what ATR is basically an indicator that calculates the range of the previous X number of days. Okay, so in this case, we are using a 14 days. So it means we are trying to calculate the average range of the past 14 days that the market has been trading, right? Between the high and the low, what's the range? Okay, so that's how you get this graph over here. Okay, so let's say you were to enter somewhere here upon this candle here. Okay, how do you set your stop loss? Okay, at this candle here, just look down. Okay, look down at this level, and you can see that at this level, the ATR is actually 0.00448. Okay, so the way to read this is that it's actually 44.8 pips. Okay, so you want to set a stop loss of 48 pips. Sorry, 44.8 pips, which is about 45 pips. Okay, just round it off. Okay, so it's about 45 pips. So if you enter here and you put a 45 pip stop loss, your stop loss will be somewhere here. Okay, so this is how you structure the trade. Okay, so in this case, you entered here, your stop loss is above here. Okay, your take profit could be the recent low. Okay, you could do it here. Okay, if you do it here, your risk to reward is not that good. Okay, that's option number 1. Okay, if you take profit at the prior swing high or swing low. Okay, the other way is to actually trail it, right? You can trail it through a couple of ways. Okay, let me just clear it and show you how we can actually trail it. Okay, one way to trail it is actually using the EMA, meaning that just wait for price to close above the EMA. Okay, now the problem with it is that a lot of times if you do that, you might give back a lot of your gains. Okay, in this case, let's say you entered here and you didn't take profit, and then you see price retrace back here, and then your entire profit is almost gone. You see, almost gone. But if you sit through, you would have hold it until somewhere here. Okay, where price closes above the 50 period EMA. Okay, that's how you trail it. That's one way to do it. Okay, the other way is to use the market structure, meaning that you can see that this is actually a swing low, this is a swing high. Okay, if you cannot see it, just change back to the line chart. Okay, and you can see that this is a swing high, and then every time price makes a new swing high, you just put your stop loss here. Okay, so that's another way for you to trail your stop loss. Okay, again, there is no right, there is no wrong, so it's just up to you. Okay, so let's go through another example. Okay, before I move on to the secret sauce, which I know a lot of you are waiting for, right? Because you cannot find this anywhere else. Okay, same thing. Okay, you have the 200 EMA sloping down. Okay, that's criteria 1 checked. Okay, criteria number 2 is that you want there to be a rejection of the 50 period exponential moving average, in which you actually see it over here. Okay, you see that at this candle here, there is a pin bar over here. Okay, so this is your entry. Okay, this is your entry. So how do you place the trade? Look down to your ATR and you realize that it's 0.00784. Okay, so that means it's about 78 pips. Okay, so what you can do is you can put a short position, just enter when the candle closes, put a stop loss about 78 pips. Okay, so about like this. Okay, about 78 pips, and depending on how you want to take profit, you can choose to take profit at the recent low. Okay, in this case you can do it here. Again, the stop loss is not fantastic, or you can take it even at this recent low. Okay, or you can trail your stop loss as what I mentioned earlier on. Okay, so you can see that this is a very straightforward strategy. It's simple, it's effective. Okay, ideally you want to stick to the day chart. Okay, I would recommend you to start from the day chart if you are new to trading, because it's the clearest. Okay, it's clean, it's easy. Okay, it's not too confusing. The moment you start going to the H4 charts or the H1 charts, price gets a bit messy. Okay, so if you do not yet have the experience to trade the lower time frames, I recommend that you start on the daily chart. Okay. So this is the strategy. Okay, so now let's go back to the PowerPoint slide and let's talk about the secret sauce. Okay, how do you drastically increase your win rate when you are trading using the moving average? Okay, so what I want you to do is I want you to watch the prior reaction to the 50 period EMA. Okay, if you are using your own moving average strategy, that's fine. So what you want to do is you just want to watch the prior reaction to the moving average that you are using. Okay, so if you see that price is supported or resisted at least twice, okay, then you have the hypothesis that, okay, the market is really observing the moving average, and I can reasonably conclude that if it's supported twice, it is going to be supported yet again. Okay, so in this case, you are really letting the market tell you that hey, look, we are actually paying attention to the moving average. Okay, rather than to just assume that your currency pair or your instrument that you're trading is going to respect the 50 period EMA or whatever moving average that you are using. Okay, you want to let the market tell you. Okay, so how do you do it? You look for two times. Okay, so in this case, I've put out the euro dollar. You can see that it was rejected once. Okay, it was rejected twice. So on the third time, you will expect it to be rejected again. Okay, so this is how you do it, how you introduce this secret sauce to increase your win rate. Okay, and when you see this kind of things, it's very good for you to throw your stop loss according to this moving average. Okay, because you entered knowing that the moving average is going to be resisted, right? So it only makes sense that you exit when price breaks this moving average and when this hypothesis of yours is no longer true. Okay, so this is how you do it. I have another example for you, and then I'll just do a summary and end off this video. Okay, so I have another example over here. So it's the same thing. We are on the euro dollar again. So let me show it to you. Okay, so again, you have the prior 50 period exponential moving average. Okay, the blue line. You can see over here that is supported once, supported twice. Okay, so again, as I mentioned, if price is supported or resisted the past two times, then it's very likely to happen again. So look what happened over here. Okay, price was supported yet again. Price was supported yet again. Here it's kind of still supported, and then finally it broke. Okay, so let's say if you were to enter here, okay, depending on how you manage your trade, okay, you may or may not have made money. Okay, but I want to just show you the concept. Okay, the concept is that you want to watch for the reaction at your moving average first. Okay, you do not want to assume that the market is going to be looking at your moving average. Okay, because there are 1,001 combinations of moving average out there. So how do you know that the market is looking at it? Okay, you just watch the market, right? You let the market tell you. You do not try to predict whether this moving average is significant or not. Let the market show it to you. Let the market test it twice, and if it holds, then you know that okay, it's very likely that the third time it is going to hold. Okay, so this is how you use this secret sauce that can help increase your win rate. Okay, so hopefully you enjoyed it. Again, if you are enjoying this video, right, please, right, help us to grow, right? Please hit the like button, please hit the subscribe button, because we're dropping so much value just just to serve you, just to help you, and all this information is made available for you for free on our channel. Okay, we have a lot of other videos, so make sure you check out our other videos as well. Okay, so just a recap. Okay, so in today's video, okay, I gave you the criteria of the moving average trading strategy. Basically, you want to look at the long-term trend, which is 200 EMA, right? If it's up, if price is trading above it, you want to be buying. If price is trading below it, you want to be selling. Okay, then you look at the 50 period EMA. Okay, you want to look for a bounce of it, meaning that price is supported or resisted at the 50 period moving average. Okay, I talk about the entry trigger, which is using candlestick patterns. The stop loss is using your ATR, 1 ATR, okay? Take profit is optional. You can target the previous swing high or swing low, or you can trail your stop loss according to market structure, right? I gave you examples, right? If you need to go back and look at these examples, right, you can feel free to rewind this video to watch, to rewatch how I did it, right? Okay, what you can also do is you can go to tradingview.com and start applying this strategy after this video. Okay, lastly, I share with you the secret sauce to drastically increase your win rate, which is by actually watching for the reaction to the moving average. Okay, you want to at least identify that price has been resisted or supported twice on the moving average that you've chosen, right? Once you see that, then you can reasonably conclude that the third time it is going to be supported again. Okay, so I've come to the end of today's video. I hope you enjoyed it, right? If you have any questions about this strategy at all, just leave a comment down below. We'll do our best to address it. If not, thanks for watching. I'll see you in the Telegram channel.